Faye, and thanks for putting this together, and thank you for all the people that are joined. I know there's a lot of seminars and a lot of webinars, so I'm going to try to make this interesting. Very pleased with the panelists that we do have. Very quickly, I have a 25-year traditional markets background, but I try to blend the traditional markets with the digital markets, and I believe the individuals that we have on the panel are the three of the best I know of doing that, and they'll talk about it. Jeff has an excellent I think it's a weekly piece called The Two Satoshis. It's fantastic. He can talk about that. Mason's an expert, and Annemarie are experts. And most of them work together, too. So before we start, and I'll let each of them introduce themselves, I'd like to just do a quick level setting of what we've seen in the markets between traditional markets and in digital markets. Then they're going to talk about what they're seeing and the major things, which is crypto trading, rapidly growing asset management, generating institutional investment participation, and then finally design and development of digital securities, tokens, and then whatever else they might wish to chat about. Just quickly to level set, and I put some of this on LinkedIn last night, one graph. I think it's interesting. I got a little bit of time at home a lot, like most of us, and so I've tracked for the course of the year, which has been volatile. The orange line represents Bitcoin, starting around 7,000. Rallying quickly at the beginning of the market, and then having a deep drop. And obviously we all know the blue line is the Dow Jones. It's not the S&P. It's a little more representative of the overall stock market. As we all know, it started at 28.5, dropped to 18. So you'll see from here, both of these assets, and I think they're very distinct assets in my opinion, they both dropped 35 to 40% in March. We all felt it, we all saw it, we lived it. And then what you saw is, who knows, and the people can talk about that drop to 3,800. That might have been a technical glitch. I don't know. I'll let the experts talk about that. But then we've seen a rally back up. But as you'll also see, you see that Bitcoin has rallied materially harder, and it's up about 30% on the year, where the S&P is down about 10%. What's interesting to me is moving on to the next page, and this is what I did put in LinkedIn last night. The 3.5% percentage move, that represents about 1,000% move on the Dow and about a 250 point move on Bitcoin. And what you'll see is the amount of days that occurred. It almost never happened in the Dow, 1,000 point move. It didn't happen in January. Went back last year. It very seldom happens. But what you see in March, when really the market very much deteriorated, 16 of the 21 or 22 trading days saw plus or minus 1,000 point moves. That's dramatic. And that actually surpassed the orange line, where only 10 in the crypto space, in the Bitcoin space, moved the same percentage. What I will tell you in my view of this is you see the equity market, the traditional equity market, starting to trade in volatile times more like the Bitcoin market rather than vice versa. And so you'll see overall, normally except for March, there's only been 1 or 2 days each month that the market moved 1,000 points. However, in the Bitcoin market, where a 3.5% move is usually happens about 6 to 10 times per month. And finally, I think this is an interesting graph to the left particularly. The monthly returns of Bitcoin and on stocks, on Dow, is Bitcoin's monthly returns have been up and down, minus 25% and up 35%. That's not normal in a traditional market. That may be normal in a Bitcoin market. I don't know. But 10% moves, plus or minus, where you saw three of them so far this year, that's very large in the traditional equity market that's much more diversified. So I do think in the volatile markets, the equity markets, the traditional equity markets have become more volatile and start to trade more like more Bitcoin. And then when you look at what's going on in the Robinhoods of the world, and I'm sure Jeff and Annemarie and Mason can talk about it, that's people that like to trade a lot. And I actually think that a lot of people that like to trade a lot also probably learn that or do that a lot in the crypto space. So as that's the 4 slides I have, I'll turn it over to the team. And why don't you each present what you have, introduce yourself, and we'll just have a go at it. Thank you.
Sure, I guess I'll start.
Sure.
Thank you, Ray. My name is Jeff Dorman. I'm the Chief Investment Officer at Arca. which is a Los Angeles and New York-based investment management company that's focused on digital assets and blockchain technology. So we focus on building an institutional infrastructure, leveraging operational risk, legal, regulatory, security standards, similar to what traditional investors are used to in the traditional assets. We have two business lines. We have Arca Funds, which is our investment arm, where we are investing and managing risk across the more esoteric opportunities and special situations across digital assets. So that includes Bitcoin, but it's much greater than just Bitcoin. And then Arca Labs, which is where we're building innovative regulated products in a digital structure that's aiming to revolutionize how people think about investments. So just a little background there. Similar to Ray, I've spent 20 plus years now in traditional markets in addition to digital assets. I started as an investment banker at Lehman Brothers. I was a bond trader at Merrill Lynch. I was a portfolio manager and trader at Citadel and a couple other smaller hedge funds. And also was the COO of a Fintech company called Harvest Exchange. So basically I've been in and around technology, bonds, equities, digital assets my entire career.
Annemarie?
Sure. Hi, everybody. I am the principal and founder. Oh, I have a, oopsie, sorry. Mason, you want to go? I fix this?
Yeah, absolutely. My name is Mason. I'm the CEO and co-founder of Tokensoft. We help enterprises, asset managers, and financial institutions get their securities on the blockchain. So we provide a full stack of infrastructure to help these types of companies fundraise. So we've helped companies comply with regulations in over 50 markets internationally. Through that process, we help them get their securities on the blockchain. So we help them administer and manage their securities on the blockchain using our infrastructure. And more recently, we launched a experience to enable investors to get secondary liquidity as well for their investments. A couple example customers. So one actually is Arca Funds. Or it might be Arca Labs. I'm not sure. It's
Arca Labs for that part, yeah.
Where we're providing infrastructure to make a U.S. Treasury-backed stablecoin possible. And so we do things like integrate with traditional sort of banks and infrastructure providers to bring sort of bespoke or interesting securities like this to market. We service both private market securities as well as public market securities, and we're very excited to be here.
Thanks, Mason. Annemarie, let's see what we got.
Okay, I'll try again. So it got rid of the echo. I also like that Mason has my name on his screen, or did you fix that? That's good. I was like, oh, you look a little different today, Mason. So I'm the principal and founder of a strategic advisory company called Liquid Advisors. We help companies, issuers, broker-dealer platforms, and other intermediaries in the private placement, secondary liquidity space, identify opportunities for how to structure platforms, offerings, and such, including kind of in-depth analysis about whether a digital format is the right way to go versus a traditional book entry system. I started my career at the Securities Exchange Commission. I then spent some years in private practice in London and New York, was at the New York Stock Exchange, worked for dark pool broker-dealer, and then made the switch into the private side of the world, where I became the general counsel of a company called, at that time, Second Market, which was an early mover in liquidity for lots of different alternative investments. And we started trading Bitcoin through our broker-dealer in 2012. I think we were the first BD really in the space to get involved into trading Bitcoin through a broker-dealer. We then created what's now called the Grayscale Bitcoin Investment Trust. We created the first private equity vehicle to invest in crypto, got that trade on OTCQX, and that company morphed into what's now Digital Currency Group. So early mover in the crypto space, went to join NASDAQ Private Market, which was a silo of NASDAQ focused on blockchain, liquidity, those sort of things. And then most recently was the head of strategy and GC of a company called Templum, which was a broker-dealer ATS platform in the digital security space. And then started my own firm to do consulting. So that's my background.
So I think you can see we have pretty deep background with the three panelists that we have. Let's start to crypto and then move to digital tokens. I think crypto is a bit more evolved, but there's obviously a lot going on in the token space also. So whether it be Jeff or whomever, on the graph we showed, what are you seeing in terms of what's going on in the markets, and you're great at comparing them to traditional markets. So
sure, yeah, and it's funny, the two things jumped out at me when I was looking at your slides. The first, of course, is just the proxies that we use, right? Using the Dow Jones as a proxy for the equity market, using Bitcoin as a proxy for the digital asset market. And obviously what we're seeing now in all markets as investors get more specialized, as there's more ETFs related to specific sectors, as you see technology growing at the expense of everything else. And also just in the digital asset space, you're seeing a ton of different digital assets that now have nothing to do with money or cryptocurrency. The first thing that jumped out at me is you just need more charts in general, right? I think all of the things that we're now looking at when we are trying to make comparisons are generally not broad enough anymore relative to what is actually happening in the markets, right? The amount of information and trades that are happening on Robinhood with small caps and bankrupt stocks certainly aren't being reflected in the graph of a Dow. In the same way that a lot of the investments that we're making in the digital asset space are not being reflected in a price of Bitcoin. And we'll go into more detail on that shortly. But I saw a fascinating chart. I think it was Man Group who put it together, who looked at the price of stocks that have CDS trading at 1,000 basis points or wider, which basically means that they have the highest risk of defaulting on their bonds. And the stocks of those companies were outperforming the Dow by 1,500% in the last 2 months. So just as another anecdote of how the Dow Jones itself is not necessarily representative of what's going on in the markets right now. The second thing that popped out at me was, to me, that none of the charts on volatility surprised me with regard to Bitcoin. Obviously, we know Bitcoin is volatile. We know that it's certainly a less developed market relative to equities and bonds and some other asset classes. But the fact that you can have a move like you did in March in the equity markets, I think a lot of people would look at that and say, oh, well, that's the tail risk, or that's the black swan, or that's the kind of thing that just pops up out of nowhere. To me, it's the opposite. To me, is that volatility has always been there, and it's been suppressed by moral hazard and the Fed for the last 12 years. I think every single equity trader and derivatives trader knows to sell the VIX or to buy puts on the VIX, because it never volatility never stays, right? There's been call strategies and call writing strategies for a decade now, because everybody has basically baked in the fact that the Fed will take out all of the volatility in the equity markets. So to me, March was more of a glimmer of reality, not necessarily in terms of the point drop in the Dow or the 40% decline, but in terms of volatility. I think that's the right amount of volatility for what the equity markets are today and for how much leverage is on these companies. It's just been artificially suppressed for over a decade now.
Anyone else have anything to add to Jeff's comments? All right, so moving on to how robust does the cryptocurrency market need to be to really support a very fluid digital token market? Or are they completely independent?
I'd say they're completely independent. I think I put cryptocurrency in a bucket that's separated from digital tokens or digital securities. If you're talking about tokens that represent, corporate interests that are regulated by the SEC. So I think they're two different buckets. And I think there's been a lot more progress made on the cryptocurrency side for things like trading and clarity of rules than there is actually on the digital security side, which is not saying much in today's market. But I'd say they're two different things.
Yeah, I think so. As an infrastructure provider, we're focused more on the security side. So how do we take these digital assets, or how do we take real world assets, convert them to digital asset, and then wrap it in a manner in which they reflect exactly what they would do in the traditional markets. And so primarily our business is in making these digital assets very highly restrictive, because we're more of a infrastructure and compliance play than anything. And I think one thing that's interesting is, so first we have to start, if it's fresh infrastructure, we have to start very conservative. And I think as the as the space does mature, I do think it will gain the characteristics of the traditional like cryptocurrency space. Maybe not all of them. Like for example, traditional cryptocurrencies are permissionless. Anyone can go and purchase them. Not exactly true for securities or for all securities. And so there's going to be some like limitations, but I think right now we're sort of going through a phase where these things are starting to abstract to the point where they can start to resemble certain characteristics of traditional cryptocurrencies. For example, with publicly registered securities, I think those will have very similar characteristics, some limitations, but I think over time those will have start to adapt the qualities of traditional cryptocurrencies. There's something going on in the crypto space where the DeFi products are starting to mature to a point, and I sort of throw security tokens sort of in the same bucket just because the infrastructure is similar. And we're seeing a lot of activity in the DeFi space, sort of with the compound token and the action that's happening there. And I see over time like these two concepts sort of merging, and being able to use security tokens sort of as collateral to go get a stable token. So you have your security token, you lock it up, you get the equivalent amount of dollars out, and now you can use those dollars to do whatever you want. So I think the merging of the two sort of disparate concepts is going to happen this year and the coming years, and I think it's going to be very fascinating what the innovators in this space end up coming up with.
So you're saying the stable coin may be some of the secret sauce that helps unlock the potential of digital tokens?
Yeah, if you look at what Maker is doing with multi-collateral DAI, they're sort of merging the world of security tokens or trying to merge the worlds of security tokens and stable coins. And so in effect, you take your security token, you lock it up, and you pull out the equivalent amount in dollars. And I think it's those types of products, they're going to start merging those two concepts first and bringing those two worlds together.
Anything to add?
Well, I mean, I hate using the word cryptocurrency. I don't use it. I use digital assets, and the reason for that is there's no doubt that this technology was built first with cryptocurrency, right? I mean, Bitcoin is trying to be a global currency. Even the stable tokens that Mason was mentioning, I mean, these are used as a medium of exchange. They are definitely a form of currency. And there's no doubt that these, by market cap, by size, cryptocurrency is the biggest part of the digital asset world right now, largely just because Bitcoin is so dominant. But to me, and I use this parallel all the time, the digital asset space is now basically fixed income market, right? The fixed income market is incredibly complex, right? I know you and I grew up in the fixed income world. Like it's incredibly complex. If you've ever read the Fixed Income Bible written by Frank Fabosi, it's 1,300 pages long, and it's
published by him, not written. He only writes
true.
The foreword.
Good point. But it's 1,300 pages long, and it's because it is incredibly complex, right? Fixed income includes government bonds, municipal bonds, corporate bonds. It includes callable bonds, puttable bonds, convertible bonds, preferreds, bonds with warrants. You've got convection, you've got duration, you've got zero coupon. I mean, it is so complex. There is so much going on within fixed income that you couldn't just say I'm a fixed income expert, right? There are different pockets of it. And then that's what's happening in digital assets as well. The cryptocurrencies are really interesting, right? From a macro standpoint, they are solving some real problems with regard to hyperinflation in some emerging countries, with regard to costs and speed of sending payments. But the rest of the digital asset space, to me, is far and away more interesting and will ultimately be much larger. And this is anything from smart contracts and protocols that are allowing you to build different tools like the decentralized finance stuff that Mason was speaking about, down to real companies that have found a way to introduce a digital asset into their capital structure. You think of equity as a claim on profits. You think of debt as a claim on assets. I mean, digital assets are now a claim on. You're going to start to utilize digital assets. You'll probably see the airlines issue some form of their airline miles in the form of an asset. And you'll see Starbucks issue rewards in the form of a digital asset. So I think this ecosystem is just growing leaps and bounds beyond just cryptocurrency.
I agree with Jeff. I think, the challenge when something's deemed to be a security is the regulatory slowness that we're seeing coming out of the SEC. The CFTC has been much more progressive, I think, around digital assets that are cryptocurrencies or commodities around cryptocurrencies, where we have an SEC that is requiring companies to get what they call no action letters, where they won't take enforcement action against companies to determine that something's not a security, when the fact patterns that are going into the SEC right now are, like a Starbucks card or like, a coin to play games. So what I'm hopeful for is if we have a change of chairman at the SEC, we'll see more progress made there to provide clarity for the digital asset space that are digital securities. And I think there's just so much confusion right now among companies and broker dealers trying to figure out how to actually create markets around these types of assets and do it in a way that satisfies the regulatory structure, with a lot of hurdles being thrown up by the SEC and FINRA. So I think it's a space that's ripe for innovation and change. It's just the regulators haven't caught up with the innovators yet, which is very frustrating.
But to be clear there, and you're absolutely right, but that's very frustrating if you are a company or a project trying to issue a digital asset. That's also very frustrating if you're a service provider trying to, allow trading or allow administrative features around a digital asset.
Correct.
From an asset manager standpoint, as an investor or as a user standpoint of a digital asset, none of this really matters. And we hear it over and over again. Well, what about the regulatory? What about the legal? Like, I don't care if it's viewed as a security or not. I mean, I have a hedge fund. I would put baseball cards in that hedge fund if it was allowed in our mandate and we thought that it was going to make money. So a lot of that idea of, oh, what's a security, what's not, it's irrelevant with regard to what already is outstanding. It definitely is going to impede the growth of new tokens that come to market, but it doesn't affect us from an investing or from a user landscape of what is out there today.
But if they're investing in these assets and they want liquidity, at some point in time, you can't trade a digital security token on a crypto exchange. So
right.
That's the challenge. I think it makes the asset more efficient in many, many ways, and working with a platform that's doing a digital security token. We call them digital securities. So I'm just going to use that parlance because I think it, at least in my mind, makes it more clear. But they're going to issue digital securities around bank loans on infrastructure assets. And that's a really complex investment asset that blockchain creates a huge amount of efficiency around. But again, if you're trying to get an issuer to represent their asset in a blockchain format, they're going to want to understand what is secondary liquidity going to look like. Am I going to be able to get it? Where am I going to be able to get it? I think there's a lot of conflation between token, trading on a crypto exchange versus a digital security that can trade at a crypto exchange, unless that exchange has a broker dealer with appropriate licenses. So I think
right, but that goes. Sorry, go ahead.
Yeah, because I was going to say, but for a hedge fund, I think that's a different. I think it's a different analysis. I think for more accredited investors. Yep, go ahead.
Sorry, Annemarie. So I use this as a segue. We can't have one of these without institutional investor adoption.
Right.
I've dealt with, and Jeff and I have dealt with institutional investors, and so has all of us on this panel for a long time. Can they really participate in this new world if these are not, regulated and are not basically meeting all the patterns? Because they have fiduciary, reputational, all this type of stuff. So can you have institutional adoption by saying what Jeff was saying or not?
So I think absolutely yes, but I think that if you're not doing this in a regulated fashion, enforcement's knocking on your door. And we're seeing, enforcement action after enforcement action after enforcement action around token offerings or initial coin offerings that were done on the basis that they weren't security offerings. So I think that the market has cleaned that up significantly. But I'll tell you, at Templum, we were trying to place a very significant private REIT transaction to institutional investors. And it was just a traditional REIT with a really good coupon rate, a private REIT. And we were going to put it represented in, a tokenized format. And institutional investors around the world kept saying, why do I want to buy it if it's blockchain based? What does that get me? How am I going to show custody? How am I going to show ownership? And it was a confusing message that we ended up deciding not to tokenize it at issuance, but rather to tokenize it when it was eligible to be traded. So I think institutions are absolutely interested in the efficiencies that blockchain brings around the security offering, especially around secondary trading. But I think they still are looking for a little bit more clarity before they jump in, at least in my experience. And Mason, you might be seeing something completely different.
No, I think you're correct. So I think, and from my perspective, I think everyone looks at the digital security space, and I think a lot of people assume it should look like the digital asset space. But if we look at like Bitcoin exchanges and crypto exchanges, they're all a single like vertical product. So it's an all-in-one service that does custody, exchange, compliance. And when it comes to putting digital securities on the blockchain, I think many folks just underestimate how much infrastructure is packed underneath these services we use on Wall Street. And now we're trying to recreate them on the blockchain. So we're trying to make it even more complicated.
Less complicated.
And if we look at sort of the world of securities, there's a lot of different types of licenses required just to bring a single security to market. So there's a lot of different participants that are necessary there, and they're there for a reason, right? Like all of these licenses came about because there was a problem at some point in time, and they decided to separate this type of service or activity from another type, just to have good checks and balances. And so so I think as we're rebuilding this infrastructure on the blockchain, it does take a lot of time and abstraction to sort of get it to the point where institutionals can interface with it. And so a lot of, so for example, a more traditional looking custodian needs to exist. Perhaps a traditional looking settlement service needs to exist. And all these pieces have to come together on the blockchain to be able to make it accessible to institutional investors so they can access these services like they would traditionally, or at least access them in a frictionless manner without having to change their procedures, their processes, and to be able to sort of fit into the system very naturally. So I think that's the problem. It's just the abstraction is necessary, and the time, it's going to take some time to build all these services like they exist traditionally on the blockchain.
Jeff, anything to add on that?
Well, I mean, going back to the original question of like, will institutional investors come in here? I mean, they're already here, right? There's a hierarchy, right? You might not have the most conservative pension fund in the world in here yet, but you do have some endowments, you do have family offices, you do have some sovereign wealth funds, you certainly have other asset managers. You know, they're starting to come. You know, one by one, all of the issues that have come up over the last 3 years are starting to get knocked down, right? You know, the first question was, well, you know, there's no custodians. Okay, well, now there is. Fidelity leading the pack, as well as some up-and-comers. You know, there's not enough reporting. Well, now there is. There's great fund administrators. There's great accountants. There's great auditors. There's great service providers, you know, like you know, what Annemarie has done and what Mason has done. So, you know, most of these complaints or these pushbacks have largely been solved for in the last 3 years. There's still more to go, but an institutional investor can very safely invest in the space now, whether they do it through a fund structure like what I have, or they invest directly, whatever the case may be. I think part of the reason that there's less institutional investors right now is institutional investors, for the most part, are very good at asset allocation, right? They're good at modeling what the yields or what the returns are that they need to find and where this fits into an overall broader portfolio. Well, there's hundreds of years of data for every other asset class. There's not that much data in this asset class yet. So how do you figure out where something like Bitcoin fits if you have no idea what the return potential is going to be? How do you figure out where my hedge fund will fit if you have no idea what the return potential will be? And vice versa, the stuff that Mason and Annemarie are talking about, there's going to be incredible 8, 10, 12% yielding, you know, asset-backed tokens that come to market pretty soon. But who's the buyer of that, right? Because the people who are already in digital assets are looking for 100% returns and aren't interested in 10% returns. And the people who are interested in 10% returns haven't figured out how to invest in a blockchain-based wrapper yet. So some of this is just a mismatch of data and expectations. And education, really, and not anything related to the securities themselves or the tokens themselves or the infrastructure.
Great. So I think if anyone has a question or two, I know we have to wrap it up soon. Please type it in. I'll try to direct that to the panelists while I wait to see if any do come up. I would say that each of these 3 individuals are leaders in the space. If you have investment needs, you know, please speak to Arca. If you're tokenizing, speak to Annemarie, and Annemarie is very versatile. And, I actually, in Mason, I do work with Mason and my company that it's combining real estate and capital markets and technology. We are working with Mason. I call him the Davos of Tokensoft because he spoke at Davos, as did Larry Fink and others. So, these are world-class people. So, as you continue to work on whatever you're doing in the digital asset space, feel free to look them up because they can either do it for you or get you to the right people. So if anyone has any questions, I'll give it like 30 seconds. Please type it in. I think I can see everyone's chat. Don't see any, but wait 30 seconds, or then we'll move on to the presenting companies. I urge everyone to stay. Often a lot of these companies are very impressive, so please do watch. Okay, I got a question here. I'm not sure who I'm directing it to. In terms of infrastructure, what platforms do you see as moving forward for DeFi? Is it all Ethereum, EOS, and are there pain points that lead to the need for other projects? Anyone can take that. You want it, Mason?
Yeah.
I'll start quickly on this one. So, everybody who is building a protocol or a platform of some sort is ultimately trying to solve for one of the three elements, if not all three elements, of speed, transaction sizes, as well as decentralization. And pretty much everything that has been built so far, from Ethereum to EOS to new ones like Algorand, they're all somewhere along that triangle of if you focus more on speed, maybe you're giving up decentralization. If you focus more on decentralization, you're giving up on speed. Ultimately, I'm not an expert in the individual technologies to tell you which one is going to be makes the most sense. What I can tell you, as someone who has built a two-sided marketplace and has been around two-sided marketplace growth, is that a lot of times the technology just doesn't matter that much. What matters is what the brand is and what the perception is. And right now, Ethereum has such a head start over everything else that if you're a developer, you're more likely than not to try to build on Ethereum because that's where all the activity is. If you're a user, you are more likely to gravitate towards Ethereum because that's where everything has been built yet. Now that can shift over time, but right now it is just miles ahead of everything else in terms of where the activity is. And again, if you think about two-sided marketplaces, like anybody can create eBay, anybody can go create Amazon, but not everybody is going to get the sellers and the buyers to come at the same time. And that's what Ethereum has largely solved for more than anything else so far.
Yes. So the majority of I think the majority of the DeFi solutions are in Ethereum. But part of the reason was they just had really mature developer libraries, and it's really easy to get up and running. So the infrastructure is pretty mature to get started. But if we look at the market cap right now, it's about like 6 billion in terms of like the tokens that represent the DeFi companies, and then in terms of like how much is locked up. From early this year, we went from April, we went from $750 million locked up in DeFi products to 1.6 billion. And so there's been a lot of growth. All of this has been on Ethereum so far, or mostly on Ethereum. We do see like other blockchains starting to compete for this space and to fund companies to sort of build on top as well. I think it's going to be interesting to see, is the trajectory on Ethereum too fast, and is that accelerating too fast for other companies or other blockchains to pick up? And I think that's probably the dynamic I'm following. Or does it make sense for those blockchains to just focus on finding different applications that do have potential and can grow as well?
Is there, and I'll just wrap very quickly, is there an issue of private permission blockchain versus public blockchain, which is kind of builds into the Ethereum versus the non-Ethereum, right?
I mean, from my standpoint with that, I think, there are certainly people who have come to the digital asset space with a certain ideology or ethos of decentralization is better, public is better always. I think from a user standpoint, probably most people don't care that much. I mean, even whether you're using a decentralized exchange or a centralized exchange, like really, what do you go to an exchange to do? You go to buy or sell. So you want the tightest spreads, you want the best execution, you want the most people on there. So I think over time, and I don't know if that means decades or years, I think there is going to be a push towards public blockchains and decentralization. I think early on, most people don't care. They want to use something that is the best user experience, and who private will probably do well, at least short term.
Annemarie, anything else to close?
No, I think that, I think there's so much innovation and so much efficiency that's going to be available to at least the capital market space, or exists in the crypto space. And we're just excited to see the market keep moving forward and infrastructure solutions occurring that create ability for connectivity between the platforms in this space, because that's another thing that we're lacking in the digital security space, is kind of interconnectivity between all these market participants and infrastructure providers. And I think that's growing in the digital assets that are cryptocurrency space. So I'm excited to see it grow into the security space as well.
All right, I think we'll wrap it up there. I appreciate all three of you for taking time out of your busy days. And I also appreciate all the participants that are staying on and hopefully can stay on. And stay well, stay safe, and have a relaxing week. Hey, Erica?
Thanks, Ray.
Ray, thank you.